What's up, real life traders? It's Robert Falco here, and Dan Jansen and I are bringing you another edition of the Real Life Earnings Report. All right, good evening, Dan. How you doing?
Doing all right, Robert Falco. Glad to be back in the studio for yet again one more earnings report, and we got two companies with heavy interest. I know a lot of traders here. Real Life Trader Trading has both of them, so we're going to handle Twitter and AYX today.
Yeah, and Twitter has been on a massive run up into earnings. You can see there was this hammer down here from right under the 100 and just been screaming higher ever since then. Big shoes to fill, I think, with Snapchat and Pinterest earnings. So let's dive in and see if they delivered as we pull up the Q4 and fiscal year 2020 information on Twitter. So what were your thoughts on this report?
So as we were going through it before and just briefly looking at what we saw in there, the biggest thing for me is always been that their expenses are out of control. They've not been able to conquer that, and it looks like it's even increased on this one. Uh, Very interesting actual earnings report that they had out. We spent some time to look for the data for quarter over quarter, where most of the stuff that they've kind of padded to make it looks like they padded it, to me at least, where they're giving you a lot of the year over year numbers, which make it seem a little bit better. So for me, actually, just feeling wise, I was a little uncomfortable with the way they worded it. I don't know if that was on purpose or just how it came across. But I mean, the earnings weren't horrible, but they I don't think they were as strong as people were probably expecting.
Yeah, the monthly average users, the headline that came across was the 27% growth. But again, this was year over year, as you mentioned, which again, it is their fiscal year report. So I get that they want to put that in there. But when we were trying to look at quarter over quarter, because we talked a little bit about Twitter does not seem like a cyclical type of business. You know, it's not like, hey, I'm going to tweet more around Q4 versus Q3. Like that wouldn't really seem like it would make a lot of sense. So when they're saying, hey, we grew 27% year over year from Q4 of 2020 to from Q4 of 2019, like, yeah, there's a whole year in there. It's their fiscal year report, but we really had the deep dive in here, and I'm trying to find it now. They actually only grew US based daily active users by like a million, I think, from Q3 to Q4. Let's find it really quick in here. And so that was definitely like a hidden stat. So they kind of made it seem like it was a lot better than it was. And as you mentioned, the expenses I highlighted here. Cost of revenue grew 38%, research and development up 25%. So they definitely have some expenses they need to take a look at. Here's monetizable daily active users. So 27%. That's that quarter over quarter from 2019 to 2020. But if we dig in, yeah, here it is. You have to look by region. And then it's like literally this last sentence in the same period of the previous year and compared 36 million from Q3. So 37 million, 36 million. That's only a million in the US. That's not very much.
Yeah, and their cost of revenue. So they're making revenue. Just their cost of the revenue grew by 38%, which to me, that's great that they're able to bring in new revenue streams into the business. However, the cost is relatively high for that revenue. So I would like to see how after the revenue comes in, if it's something that's recurring or just they have to spend 38% additional to just drive that extra data in, because that to me is a little bit weaker of a business model. It's just not sustainable. So again, people use Twitter. They like Twitter. It's actually pretty good for if you want to catch some kind of news real quick and see what's going on. So they definitely have a user base. It didn't grow that much compared to the growth of, like you mentioned, Snapchat. Facebook's a little bit plateauing, I think, a little bit, but Twitter is not really at the same level as Facebook in terms of users right now. I would expect a little bit larger of a growth rate from their users, and then the way that they're monetizing it, a 38% increase of revenue of cost to get the revenue is a relatively large number.
Yeah, they're
And then
definitely
even
nowhere near the
research
billion.
development grew 25%.
Sorry about that. They're definitely nowhere near the billion, users like Facebook. So you would expect that they can put up some better growth numbers. International is a little bit better, but you can see if you compare, like, again, quarter 3 to quarter 4, because it's not like a cyclical business. Um, they were at 155 million, and they in Q4 and Q3 was 152 million. So that's 3 million. Well, that's not even 3% growth. So that's pretty low. And then they go in and say, given the unusual circumstances this quarter, we wish to share that the increase in average absolute monetizable daily active users through the end of January was above historical average from the last 4 years, but that they expect to see um, during the pandemic surge, like as it goes on through 2021, that they think their extraordinary growth from 2020 is not going to be as strong in 2021. Basically, like it's going to impact the numbers because, we grew so much, so now a percentage over that percentage is a lot more. So they're like watering it down a little bit, which I thought was kind of odd.
Yeah, Twitter in general, to a lot of the other social media, they're kind of in a tough spot. They're not, like, Facebook is the big daddy in the room. That one's holding it down. They have the users, they have the consistent revenue growth, easy way to advertise. Twitter's not at that level with the same amount of users and same amount of revenue that comes in. Uh, However, both Facebook and Twitter get looked at the same, where anytime there's government regulation, or are you allowed to fact check this, or can you put XYZ on this platform or take people off, they're getting hit with the same exact issues that Facebook has, except Facebook is just in a much better, more solid, profitable position. Snapchat, on the other hand, that's why I like Snapchat so much. It was very limber. Their size, they had such good potential, and they didn't get a lot involved with the political stuff, and people aren't posting that, so they're able to grow without a lot of the headaches from where Twitter's positioning itself. So for me personally, as far as Twitter's concerned, again, they could be investable one day. I think for me, it's got a solid customer base. It's just the expenses that they burn they burn so much money that it's crazy.
Yeah, and
So
I highlighted this iOS 14. I know the last time we looked at this, this is being used as a little bit of not a scapegoat, because obviously it does make an impact, but it's just something that people have to keep in mind with some of the new Apple features. We saw that on Facebook as well. iOS 14 is having an impact on their advertising revenues.
right, and that's a big deal too. I mean, the both Twitter, Snapchat, Facebook, all those guys, their business comes on data. The amount of data that they collect from the users is key for them to grow their business, grow their revenue. So that iOS blocking a lot of the ability to collect that data, that will affect all of the companies in some way. How strong? I mean, I'm not sure. 10 years from now, what the difference is, or what it could have been, but that will, in some sense, that will hurt the ability for these companies to collect that data, which, just again, more data on people, the more they could sell. You guys are the product. You guys are logging into Twitter, Facebook. You're the product that they're selling, and the stronger the product, the better, the more revenue that they have to grow in the future.
Yeah, and I don't know. I haven't done the math on this, but if you look at this growth as a percentage of like their revenue growth and then compare it to the cost of revenue, again, this is just looking at it and doing a little bit of math in my head, it looks to me like the cost of revenue is a higher percent. The growth in the cost of revenue is a higher percentage than their actual revenue growth. So, like you said, it just costs them more and more money in order to
Right.
grow their revenue. So,
Right. Which is okay. I mean, a lot of time getting the new customers in or the new people to use it, that's going to be your highest growth, but it's how many people are staying on the platform, how are they able to monetize the current users for a little bit longer time. If they're just constantly going out and spending just tons and tons of money in order to make more and more money, that's only sustainable for so long. So something would have to happen on that division. I didn't see anything as far as current, I guess, cancellations or I don't know if that's the correct word, but I haven't seen longevity of how long people stay and how much they're expecting per person. I think Facebook had some kind of numbers in their report based on what each person would actually bring in on average to the company based on the revenue and based on the user. So I didn't really see anything like that in here.
yeah,
So it's
they
a little
didn't
tough
give us that
to
data.
say. And the other thing with Twitter too is this was the year that this year does not. This is all fourth quarter. So Trump was banned from Twitter in January. So those numbers aren't even actually out yet as far as if they do have some kind of decrease or if that's just a big nothing burger to Twitter and people just still use Twitter how it is. So that's going to be interesting to see for the next quarter. That's something I would definitely be looking for.
Yeah, so Twitter did have again big expectations. I think they were pricing in like an $8 move on this. Obviously, option buyers crushed once again going into earnings because it obviously had the run up. There was free money. I mean, there was naked call money up in the 80s. I think at one point today there was naked call money for call money if you were had shares and were selling calls up at like 89 or 86. There was like a quarter up there. Um, and yeah, option buyers just absolutely smashed on Twitter after hours. So it's still it is at an all time high. Or actually, no, I'm sorry, not an all time high, but it's up there ever since let's see, February of 2014. So where do you think Twitter goes from here?
Yeah. So anytime I see the run ups into earnings on any company, that's a little bit of a warning sign to me that unless the company's going to come out and just smash it, that it's very tough to move from there because all those people are now profitable. Looking for maybe Twitter to come out with some great news, and any company right before earnings that starts running up. I, I I would not personally get into if we start with long term investing. This is just it's just too shaky for me at this point. For me to get in, I'd want to see that they have the spending under control, that they're kind of forming a solid base, that they don't have to increase spending to get new revenue by 38%. Those are key numbers I would want to look for. As soon as I start seeing the cost go down of what they actually spend, then it would become a little bit more sustainable to me, where I'd say, okay, I'd be comfortable holding it for 10 years. Right now, it's just too shaky, and there's a lot of news about Twitter, who's on it, what people say, who's blocking who, what's being fact checked. All of that stuff is still playing into it. It's still big. So for long term, it's not something that I'd want to put in my portfolio. I think I have. I there's just a lot of better. If you want to get in the social media field, there's a lot better companies that are just more stable that I'd prefer. In terms of day trading is different, but swing trading, I would want to see a pullback after this run. Um, Worst case down to like the 55 range, if not just one more, a little bit bigger of a move. But it's a investable to make a trade on. I would just wait for it to pull back for me personally. And if it does something crazy and just shoots up, it goes without me, and I'm okay with that.
Yeah, I would like to see it pull back into 53 shorter term. But from a if I just want exposure longer term to social media, I would much rather be in Pinterest or Snapchat or even Facebook. I think this would be like the last one that I would pick to long term invest in as well. Again, I like Twitter from a standpoint of, I mean, the memes on there, the tweets back and forth, people battling like around GameStop and AMC and all that. Like that's hilarious, and the meme accounts. But other than that, yeah, I would invest my money in a different social media company.
Yeah, it has its purpose, but as a business, yeah, I think there's some better better options for me personally.
Let's go over to AYX. I know this is one that there's been a lot of RLT members in AYX back over here. This had a really nice move going. And then a couple quarters ago, they really disappointed. Then you had change of CEO over here, disappointed again. I think they fired their chief revenue officer in this gap somewhere. So they've really changed out a lot of leadership. I think there was an announcement today. They changed out another leader, like their chief product officer. But AYX is gapping down after hours. What did you think of this report here?
As far as from what I saw in the report, they did have growth. It was very small compared to a company of this size in the tech field. Had good. I think they announced some partnerships with Snowflake. There was another company there which I'm not as familiar with, but those things are good, probably long term for AYX. The growth aspect of it, I feel like the revenue should have been a little bit higher. I think we did get a pretty decent sell off after when the news at least came out, and then I think their guidance was a little weak as well. So I would just think that they should be growing a little bit further. And like you said, they did have a bunch of shakeups that they actually listed a bunch of people in the report as far as new positions and switching up things a little bit. So to me, it's almost like they're going through a little bit of identity crisis of who are we, where are we going, and how do we get there. Like I said, I would like to see that the revenue growth would be a little bit bigger than what it is.
Yeah, for if there was any year for a company like AYX to or Alteryx to have just bang out numbers, I mean, it was definitely 2020. And I think Coca Cola grows faster than 3%. So this was not great in my opinion. This revenue growth, quarter over quarter, and then for the full year, it was 19%. But again, there's plenty of growth stocks, especially in the tech world, that you're getting 19% quarter over quarter growth, let alone an entire year. And it's not like this is like some massive company. I mean, I'm not saying that it's, super small. I mean, 400 or 500 million is not meager, but in the grand scheme of things, like this isn't a very huge company. So when you're smaller like this, you could definitely grow even faster. And so I definitely think that was a little bit of a disappointment. And then the guidance here, I think, was the big one. Full year 2020 guiding 555 million to 565. The expected guidance was 567, and that was based off of that lowered guidance that they came out with back over when we gapped down, I think over here. So they pulled the guidance, they reaffirmed it, and then it's back low again. So it doesn't really look great.
Right. The other thing that I noticed too is the amount of cash on hand decreased as well, rather largely. Usually, a company in some kind of growth, unless they came out and said we've bought out another company or something like that. In situations like that, okay, they dropped in cash and assets and things like that. As far as from what I could see, all they did was partner. So usually, partner doesn't really cost them that much money, if anything. It's more of like, cool, we have our services, you have yours, and let's try to come out with some kind of deal or some kind of whatever the case. So I don't know if that, however that partnership was structured, if that cost them some money to do the partnership. It could be, but I didn't really see anything as far as we're acquiring a new company or something like that. So and if they did pay for some kind of partnership and that deal ends, then they're just kind of out of that money too. So I don't know how exactly those partnerships were structured. Long term, I do like Snowflake, so I do like the fact that AYX is in the same room with Snowflake. I think they have some potential beneficial outcomes from the scenario, but yeah, that's a little worrisome to me that they did drop some of the cash from previous quarters and year over year.
Yeah, you want to see them be able to put money into compounding, revenue growth. And when their revenue's not really growing that much, and you got this decrease here, you can see this is fiscal year 2019 and then fiscal year 2020. So that's what, about 240 million down. And a lot of it is coming from this additional 500 million that they spent on purchase of investments, but I didn't really see that outlined in here. Maybe I missed what that was, but you would think that they would have mentioned that because it was a pretty substantial increase. But I didn't really see what it was. So, as far as AYX, I don't personally have a position on this. Ever since all this leadership stuff started happening, I didn't even know they were looking for a new CEO when this happened. And then the whole firing the chief revenue officer, to me, that's like a little bit of a warning signal. So I have no position in AYX. I don't think I'm looking for one until they return to a little bit better growth. What about you?
I did have positions in AYX. I sold out as of yesterday, so I didn't sit through any today, and I do like AYX long term. I think they'll be okay. For me, it was just we're getting close to earnings. They did gap down twice on earnings prior, so I was like, every time the earnings come out, it's a little weak. I was pretty profitable. I actually got in at around like 106 on the trade, and I had a previous trade
Oh,
too that I ended
nice.
up selling after that. What was it? The CEO announcement. So I I I've been doing well with AYX, and that kind of was like I might want to hold it, and then I just said, you know what, I'm profitable. Let me lock it in. If I was to get back in the position, it would not be tomorrow. I would wait. It seems to have a steady base around the 112, 110 area, somewhere in that range. I don't mind picking up some shares there and maybe doing some kind of pyramid in on AYX. But yeah, I would wait for a little bit bigger of a pullback. It's the actual earning reports, they're not something that just screams we're growing like crazy. It just kind of seems like they're just trying to find their way a little bit. And I think in the market with all of the potential names and stocks and tickers and things like that that we have, I don't really want to tie up a lot of my personal portfolio in AYX, and it just doesn't scream complete bullish to me. But if it does get down to that 110 range again, somewhere in there, 106 to 112 in that range, then I'd probably be looking to pick up some more shares.
Yeah, it was actually looked like we were going to hold up relatively okay, and then this just rolled over. So, and we're sitting on the low. Obviously, the after hours trading here is coming to a close. So we'll see how it opens, early in the morning. But I have a feeling that some of these earnings gaps on AYX have been pretty brutal. I'm not sure if we have a ginormous bearish candle, like this or like these, but I don't think that we're going to just hammer out of here tomorrow morning. I really don't think that that happens. So I agree with you. I would rather wait a day or two, and maybe if you want to start a position, down in here, there's going to be some liquidity. Otherwise, yeah, anywhere between 104 and 112, probably a little bit better. But personally, I'm just going to steer clear and wait for a bit though.
Yeah. Yeah. I think, like I said, I think long term they'd be okay, but I think it's going to be a very long wait. So I don't think it's going to be an immediate, we just hit a certain number and just take off and bounce from there. I think it's going to be a little bit slower slide up almost with a couple up days, couple down days, and just eventually over time it grows. But I think it's stable enough. They do have opportunities. I do like the partnership with Snowflake. It's just a little. It's not there yet for me.
Yep. Well, we'll see what happens tomorrow. We'll see if it's a good day trade. There's quite a few people trapped on that one.
Yeah,
So,
day trade wise, it might be perfect. I have no problem day trading. It does move very strange, but I don't know if that's just based off of volume or it's. I've noticed day trading it has typically been a little difficult, but usually swing trading I've done pretty well with.
all right, very good. Well, thanks so much, everyone, for tuning in to another earnings report. And don't forget to hit that like button, subscribe. I think it's like 60% of you that watch these are not subscribed. I'm not sure what's up with that. So
Gotta subscribe.
hit that button so that you know when we drop some more goodness on all of you. Check us out at reallifetrading.com, and we'll see you next time.